physical gold is in demand now. So, the keep it under your bed crowd, right? Okay, I have no idea why you want to do that. That's ridiculous. There is plenty of vaults all around the world that can actually do it. So I don't advise anybody to keep it under your bed, obviously. And apart from anything else, as soon as your wife hears that you're sleeping with a gold bar, life becomes way, way, way more difficult at home. Anyway, and here's the other thing, right? So as the ETFs, the rise of the ETFs, as we all know about, we don't need to go into the rise of ETFs worldwide, but as you can see, the rise of the ETFs, you can still see that demand is matching the gold price to some extent as well too. So more ETFs, more gold. Okay, you could argue some of that's to do with price times volume, but actually what it does do is illustrate that relationship is still quite strong and quite there. Now let's look at the supply side. Roll back, supply. Okay. Wow, I'm running out of time. I've got 2 minutes left. Okay, let's look at the supply here that you've got. When you look at the supply of gold, we go into this, right? You've got pretty much most of the miners. I don't see a massive increase here, ex of some stuff that Newmont are doing in the market. I do not see, and I guess these guys at Kirkland, whoever they are at the bottom corner, right? There's not really producing an extra awful lot. It's just like they found one field, right? But overall, the decline is there for a lot of parties. And most importantly, you look at it overall, gold production isn't going anywhere. So a fixed supply. What's been really interesting about the fixed supply is that given the gold price at the moment, so it roughly costs around $1,100 to pull gold out the ground. Okay, probably going up quite quickly now because of supply chains and cost of diggers and all that sort of stuff, right? However, right, let's call it 1,100 these days rather than 1,000, but it's what it used to be, right? They're still making quite a bit of money, okay? This is the top cash flow. Look at it. This is the reason probably why the gold market has held where it is. And the reason why it's held where it is around the 1,800 mark is the gold miners are making a lot of money. However, once the demand starts, they can't stop it, right? That's the key thing to bear in mind around this. People say, oh, gold is linked to inflation. It's rubbish. Ignore it. Guys, maybe if you guys want this, you can have some of these charts later on. It doesn't make a difference. Where does it make a difference? It makes a difference when you look at it against money supply. Oh, I wonder what's been happening recently to money supply. Okay, I know you guys can draw that conclusion, right? So I'm not really going to go any further than that. Now, negative real rates. Who knows what the inflation rate is in the United States at the moment? Hands up. Okay, and in fact, hands up is dead right. Hands up, 5%. Okay, and probably for those of you that are persistent inflationists, going higher. For the transitory inflationists like myself, probably going to stabilize, right? But let's look at this, right? That means that interest rates are negative by between 3 and 4%. Okay, so what does that mean? When you look at this chart, you realize that gold performs better in a negative interest rate environment. Very important, okay? Moderate and high, not so. Negative rates, cool. Okay, think about that one, right? This is the one of the stuff, right? We're getting into all of these things. Hey guys, Bitcoin and gold. Who came up with that idea that Bitcoin's correlated to gold? Find it? I couldn't. Okay, and let's look at the last thing, right, which is a lead in and a segue to Ainslie stuff. I've only overrun by a minute. Okay, this is when you look at current bull markets in gold. Where are we at? We're at 68% here on the right-hand corner. Look at the other gold bull markets. Not even close. How much more have we got to go? Well, who knows? But here's an analog to the 1970s. The blue line is now, the 1970s is before. So think about it. It's adjusted, right? What does that mean? Probably more upside to go. Okay. What does it mean when you look at it against the 95 to 2007 market? Oh, well, now it gets interesting. Okay. This is the blue line here. You can see it. Okay. Here's your blue line, right? That's now. This is then. Oh my God. That's interesting, isn't it? Okay. And then finally, if you look at the stuff that the guys at GAN Global have come up with, here are some ideas about where they see it unfolding, right? Now, these aren't numbers up here. This is different markets, right? The 1936 and the 1968 market. Do they see a slightly better performance with gold? Yeah, they're talking 10,000. Oh, by the way, if you want to solve a lot of the US current account deficit problems and also some of their debt to GDP ratios, what do? You reval gold to 20,000. Oh my God, wouldn't that be cool? Because as we all know, because there's no conspiracy theorists amongst us, there's quite a bit of gold in the Federal Reserve in New York and in Fort Knox. That rumor is not true. Dr. No did not steal it all. Okay, right. Over to Ainslie. Was it Dr. No? No, it was Goldfinger. Damn. Ainsley, over to you.
Seriously? Thanks, Jules. Okay, let's just have a little look at this one. What am I doing here? Sharing screen. I'm going to move this over here and I'm going to share my little screen because I'm going to be a little bit on the boring side. No, not necessarily boring, but we've got to break it down so we can actually get an idea of where we're going to go with this gold. And I must say, oh, hang on. Here we go. No. Darn it. Why does it always do this? I've got two screens and it just mucks me around completely. So we're looking at a lovely gold technical chart there, I'm hoping. And let's have a look at the daily chart. Now, we might have got a little bit optimistic and a little bit enthusiastic here with my green arrow going up because we've had quite a bit. Now, this is a daily chart. And if you look at the daily chart, going back to when we had a sell-off, made a sell-off in the middle of June, we haven't really moved very far above the 1833 mark and this 1722 level here. We had a little bit of a let's go give everybody a heart attack moment down here after particularly strong ADP numbers, non-farm employment numbers coming out. It wasn't expected, and then on the Monday, it just, I think one too many stops got hit and we just collapsed all the way down here, but bang, straight back up again. But what we have here is we're just sitting pat, just hanging around on this level of support. Drew this pink line in, I think, last week to show how many times we've revisited this level of support. And I know boring can be good sometimes. We do shake it up every now and again and come down here for the heart attack moment. But as you can see, gold has always respected levels. And that's something to bear in mind and completely respect as far as where you're going to trade it to. We had a really good strong push up on Friday, and then that was reversed. But what I'm looking at here going forward is when we do have good moves, the ADX, which is the average directional movement on my technical indicator, developed by Wells Wilder, is above the 25 and sustained above the level of 25. Above the 25 is a strong trend. Below the 25, as you can see for the rest of it, and it's in green, so green is for long, red DI minus is for shorts. It's well above it. And this is backed up with the strength of the trend is also about to pop over the 25, and my beloved little MACD indicator, which has now gone into the Northern Hemisphere. And now that price action is well above the 1 monthly pivot, 2, the 20 EMA, the 50 EMA, and now we had to close above the 100 EMA. I'm looking for a little bit more work to the upside. We have to get a close above the 1800, where then we need to jump across this level next as well, which is that 1833. So if we have a little look at the heart attack that gold has been giving us for the long haul since June, it's been and no offense to my furry little friend behind me, it's been a bit of a dog to trade. Quite. I think you'd have to say you go up, you start to get excited, you think, yes, we're on our way, and then it comes straight back down. And as I just showed you on the daily chart, it's just going back and hugging that area until we can get a little bit more traction. So trading this has been really, really hard. These big moves, by the way, that you see.
Sorry, excuse me, Ainslie.
Yeah.
So I've got a couple of people saying that they're finding it hard to see this, and can you go to full screen mode on the PowerPoint?
I am on full screen mode.
No, you're still.
Yeah.
You're not in presenter mode on the PowerPoint.
Oh, really?
Yeah, we've got you.
Hang on.
This happens with Zoom. Are you on 2 screens?
I'm on 2 screens.
So it's showing the screen.
Sorry.
Think it's showing the screen. You don't think it's showing. It does this on Zoom. That's better, but still, it looks a bit small. Can you guys see that better?
I can't see the chat either.
So I can't
tell you what, guys. I tell you what, guys. As you're looking through this, folks, if you've got a couple of screens, then why don't you pull up a chart of gold just to follow this, or have a look at it on your phone as we're running through this, because the levels are pretty much all the same. And for those of you that are involved in the gold market, you know a lot of these levels off by heart already. So this is, we all know some of these charts that we've been looking at here. So, but hopefully that's a little bit bigger for everybody. I think that's definitely a bit bigger than where we were, Ainsley, for sure.
Okay.
Yeah, the feedback coming through is good, Ainsley. They're saying they can see it better now. You're good as gold.
Good as gold. Haha.
Yeah.
No
well, you're better than gold, because gold's been a dog from what I just heard.
Yeah, no offense. Be careful. My dog, Max will be getting upset here. But it has, and it's been so. It hasn't been trading on vol. It just is responding to interest rates. Real bond yields, or it's something exciting like non-farm payrolls, where nobody knows what's happening there. But if we have a look out, we can see this on the weekly. You can see how long and drawing that out is. So this is the move, and my weekly chart is showing a lovely move from a low of March last year to a very nice high, and that would be the week of the 4th of August last year. I know that because I had a really nice move up there last year that gave me a good return. But what I want to point out here is after that move, I've put a fib. I'm not a big Fibonacci analyst by any stretch of the imagination, but this one particularly caught my eye because it showed me it was a really strong retracement back. It came back to the 0.618 level. 1, 2, 3. This was 2 right on the dot. We are much, much higher at the moment than any of these. We're not seeing it coming back down. We're also looking carefully at the DI plus and DI minus. This is not exciting me so much because the trend indicator is right down. It's down at 14. I need to get that above 25 to get excited. And on a weekly chart, you start seeing moves like this, you can get really excited about loading up your position and moving it along. But when that is showing you that the trend is basically non-existent, you have to take it bit by bit. I want to point this out and just remember these figures that just on the weekly, because when we go over to the silver chart, it's a slightly different scenario. So comparing the two side by side is quite interesting actually. And just on the monthly, just to pull up the monthly chart, and I'm going to compare it back to 2012 and 2013. So this last year has been, or this 2021 obviously has been a post-election year. But can you see some similarities to what happened before there was a major sell-off down in 2012 and 2013, which was probably the last little area that didn't abide by the seasonality rules, like it hasn't this year either. So we're sitting well above, and it's been the 20 EMA on the monthly chart has been used for support so far. And that's exactly what happened. So we have a very similar situation, but what I don't think we will see is this massive pullback that we saw in 2013. I could be wrong, but this is what I'm looking at the moment, that we've had two good bounces from this area, and we are going to see what happens next.
Yeah, look, just to add to what Ainsley's saying, guys, for those of you that follow my sentiment work, and we're going to do a little piece in the macro, the macro roundup we got coming up in a few minutes' time. One of the key things to bear in mind about gold back in that 2011, 2012 area was just how bullish everybody was about gold. They just could not get enough of it. Right now, nobody owns gold. So here's the interesting thing. I did a Google search on gold stocks tonight. Okay. I thought, okay, I'll go look this up, right? Do you know how many articles I found from 2021 on talking about the gold stocks and medium-term and long-term outlook for gold? I found this many articles.
I guess this many. 0.
I found one article, right? The next article, the next 4 articles were 2020, and the previous ones before that, funnily enough, were 2012 and 2013. So if if we go by the old adage of if nobody's talking, it's got to be cheap, right? Sentiment-wise, nobody owns this, guys. So now, can I grab the screen back, Ainslie, and just talk about GDX and GDXJ? Would that be okay?
Just hang on 2 ticks there.
If you're doing it.
I've just done
please.
seasonality to the end of the year, just so we know where we are. We're expecting a bit of chop until the end of November. Now, a couple of times, it does look like there should be a sell-off in the middle of November. And I remember a couple of years ago waiting for gold to sell off, and it didn't. And I waited and I waited, only because I was waiting for this little area. End of November gets my attention. In fact, my Christmas tree goes up at the beginning of December, and I only have gold colored ornaments on it. It's just the vibe thing, you know. And that's what I'm looking for going forward. So how far that pullback comes, it's only going to be, you know, where are we now? 24th of October. We're not much off November, then chop around as per the seasonality chart. And this is going back 53 years, by the way. So I'm not just pulling some pretentious ideas out of the, you know, going only back 10 years. This is 53 years. This is what it looks like. This is what I'm waiting for. And that's what we need to see how that ties in with it being so cheap, and hopefully a little bit boring, but a little bit safe and a little bit less dramatic and less volatile than other financial instruments. But Jules, there we go. I've got I think you were looking at GDX miners. And there's a chart of GDX miners. If you unmute yourself, it will be a lot clearer for everybody else.
Just literally, how many times have I done that in the last 6 months? And for those of you who don't know, my hair continues to be have a mind of its own, because we continue to be in lockdown in New Zealand. So please have a little bit of sympathy for my hair. It really doesn't want to turn out this way.
And mine isn't. My hair isn't in lockdown anymore. So there you go.
Okay, so if I just quickly grab the screen and look, what I want to do, guys, hopefully you can see this. We all love TradingView here, best system in the world. Okay, so hopefully you guys can see what we're looking at here on the screen, right? Here's a chart of GDX. Now, what's GDX? You're going to ask me. Okay, Julian, this is all very interesting, but I've never heard of this thing called GDX. Well, obviously the G, we know what that stands for, don't we? The D and the X, actually, I don't know what they stand for. That's really funny. But the key thing is, this is a collection of all the major miners, gold miners in the world, and they've wrapped it all into a little mini portfolio ETF, and this has been around now for years and years and years. What I want to show you is to try and see if my magic will work. If my magic works, then this could be really interesting. Okay, let me just see if I can get my magic to work here. All right, and hopefully, fingers crossed, I can show you what I'm going to try and see. Right, so let's maybe just go back a couple more months. All right, whoops, not too far. There we go. Okay, so here's the thing. You know, I was talking about that low volatility a little while ago. Okay, so this is the mining stocks up here, which is the bluey bit, all right, and this is the actual gold price down here. Interestingly, they don't really go any, the gold price, physical gold price, doesn't really go anywhere compared to the miners. However, let's look at those two different charts. Ainslie was talking about it. Here was those big lows we put in place down in March of this year, and look at where we are now. We've bounced, right? And for those of you that remember the sentiment chart, we've got a higher low. But what happened to the miners, right? They had a lower low. So what's really interesting about this is the miners will track gold through time. Okay, so the question is, why are they so cheap? Okay, well, they're not really that cheap. Well, actually, no, they are. And the real reason is nobody wants them. Literally nobody wants them. Okay, so a little secret here, a sentiment cycle, right? When nobody wants them. What do you think is going to happen? Which would you rather own today? Tesla, that is trading at 420 times earnings, or the gold miners, which are trading at about 6. So, okay, so here we go, right? But because nobody wants them, right? We're now in this weird place, right? Where because nobody wants them, right? People don't have any interest, but that means value, cheap. Think about it sentiment-wise. What do we need to do when things are like this? We go, okay, prove the trend, prove the momentum to us, and look at what's happened over here. Do I need to get my arrows out? You guys can see me doing a little tornado here around the low. All right, here we go. What's going on? Here's your tornado. It is a lower low, but it bounced really quickly from a technical level. That level there, this level here, it bounced really quickly back and is now cruising high again. Okay, so what does this mean? Until we break this low down here, all right, until we break that low, we just keep playing the game, all right, because this is called momentum. And as you remember from the very beginning, we're looking at momentum as being quite important. For those of you who really want, because some days, as we all know, right, let me just kill this, right, and we just get rid of this. Well, no, gone. Where are you gone? Here we go. We just kill this one. Brilliant. We just get back to the real numbers, okay? You want some excitement in your life because we all have a little bit of excitement in our lives. We can go for the gold mining junior stocks. These are the guys who go out there panning. You've seen it? For those of you who watch the Discovery Channel, this is what Dave Turin does. These type of guys, right? They go out and they're panning for a little bit of gold. They're not trying to make 20,000 ounces a year. They're trying to make like 7,000 or 8,000 a year, or maybe doing the maybe slightly smaller. Those lovely, great show. For those of you that watch that, you know a huge amount about digging holes in the ground as a consequence afterwards. But the real thing here is, right, watching Aussie Gold Hunters and also watching this as well too, is that you realise that this is slightly more exciting. So guys, you want excitement, go buy the junior miners. But of course, don't, because nobody else is. Literally nobody else is. Nobody's buying it. Okay, nobody's buying it. Nobody. Okay, all right. Hey, we've overrun slightly on our timings. Wasn't bad though. Only overrun by about 10 minutes. It's not that bad. Don't go, everybody. No, what I meant by that is we're sort of, for the halfway through the show mark, we sort of failed miserably. So Ainslie and I had a very subtle agreement. We were going to say, right, that if we overran, we had a deal, we probably wouldn't talk as much about silver, but that's okay because nobody has that either. Literally nobody. Nobody has that either. So, okay.
We've got 15 minutes.
Okay.
We're down to 7.5.
Okay, so let's stop play acting. Let's start talking about silver. Hey guys, just before I go, all right, just before I go, let's and start talking about silver. I just want to show you, this is gold against the S&P 500 on a ratio. Nobody owns them, so whatever. Nobody's got them. Okay, nobody owns any gold stocks, all right? Okay, I could go through this. Hey guys, actually maybe we'll do that at the end. Hey, let's go look at silver. Right, okay, so think about where we are, right? Supply of silver. Okay, this is it. Look at this, right? Here's the pattern. This is all sort of very interesting. For those of you who can see it on the screen, very interesting. Deep dive, integrate into your mind. Very interesting. What we really want to know about is what that supply means in terms of what comes to the market every single year, because we're all economists now, aren't we? We try and match our supply and demand together. So, 6 Bitcoin minted every year, price Bitcoin goes up because 12 people want it, right? We get this, right? Okay, so here's the thing, right? When we look at silver and we look at the actual supply of silver over the course of the last 10 years, unchanged, okay? Industrial demand of silver, you go, oh, well, that's very interesting, Julian, because when I look at that, it goes, it's unchanged. X of the little thing. I think the 2020 is I don't know, there was something running around the world. I can't remember what it was now. No, lost it. You guys might be able to remember what happened last year, but I don't. Anyway, okay. So what is very interesting is what happens next. Who has heard out there of the energy transition? I'm not going to ask for hands up. We're not in school, but I reckon that if I ask the audience to put their hands up, 3/4 of you, I can see it in my mind, right? 3/4 of you are putting your hands up right now. But what does it mean? It means that you need more solar panels and you need more electric vehicles. Now, What goes into electric vehicles? Okay, silver. What goes into solar panels? I think you know the answer already. You don't need me to tell you. It's silver. So what do we think is going to be one of the key demand drivers over the course of the next 10 years in the silver market? Well, I think the energy transition. So as goes the energy transition, as goes the demand for silver. Okay. Whew. Let's talk about bull markets. Okay, where are we? Well, here's a bull market that's just about starting to get off the ground. Which bull market is that? Oh, that's the one that we could be in right now. So when you look at silver and look at what's going on elsewhere, here's what could happen. But don't worry about it, because nobody has any. Literally nobody's got any. Nobody has any at all. Anyway, nobody's talking about. I couldn't even find an article on silver on Google, right? Even Dilbert isn't talking about silver. Literally nobody is talking about silver. Okay, there's nothing out there. Literally nothing. This is my next slide of all the articles I found about silver. Okay, guys.
Positively, popular compared to that, doesn't it?
Exactly, one article. Okay, guys, am I slightly exaggerating? Well, you do a Google search on the means of production, silver demand and supply, and see what you come up with. Maybe there's a couple of articles I might be slightly under-exaggerating, over-exaggerating. I can't remember which way around that's supposed to be. However, let's switch over to the technicals, to Ainslie.
Okay, I'll try and get the right screen this time. Really sorry about that, guys. It flicked over its screen to hello. Let's share. Is that nice and clear? Please tell me that's nice and clear.
It's nice and clear.
Thank you. Excellent. Silver review. Now, I'm not a big silver trader, but I can certainly look at a chart and look at what we are starting to see here. This is a daily chart of silver, and I'm just looking at it going, oh, hello. What have we got here is a nice ring low. We have the start of a trend. We have a lot of testing of the monthly pivot backwards and forwards for over a week and a half. Then we have a break and a continuation to the move upside. We have now hit a very strong level of resistance. You often hear that gold and silver trade very similarly, and not really, not from what I'm seeing. We have had a really strong move, a clear, defined, higher, low, higher, low, higher, low in place. Very, very interesting. So let's have a little bit of a drill down on the 4-hourly chart. Beautiful ring low bouncing off 100 EMA. It closes above the weekly pivot. I have a weekly pivot on my 4-hourly and a monthly pivot on my daily. So I am not confusing the two. I'm just looking for a better entry level. It had been consolidating for quite some time, but all of a sudden, your little bull market to which you have been referring is starting to get a little bit of traction. It is a very, very interesting chart. So we are looking at the 4-hourly going, oh, thank you very much. It has behaved very nicely. We've got the 20 above the 50, above the bouncing off the 200 simple moving average, which is now equal to the weekly pivot, and a bounce off the 100 EMA. We have got a DI plus, still hanging well above the DI minus, which is negative, and looky here. DI ADX is well above the 25 level. We're going to have a little bit of consolidation here because price action is above the 20 and the MACD is below the signal. So until that flips back up, but it's still in the Northern Hemisphere here. So we should be looking for a little bit of a consolidation, which we have had here. It's a shallow consolidation. And speaking of shallow consolidations, let's just go and have a little look at the weekly chart, shall we? With gold, as we said, gold, we looked at the move from 2020, March, and it moved similarly to gold, where we had a big move up. This came off the boil just a little bit sooner than gold, but look at this retracement. It only ever retraced to the 0.382, not the 50, not the 618. It's a shallow retracement, which is quite unusual for such a strong move. I mean, the last couple of weeks going into the into July upwards, That was a massive move. I would have expected something to be a little bit further back, but you can say here it's held support here, it's held support here. It didn't quite get down there, but it went and had a little look, came back down, had a little nosy around there again, and we are looking at a turn up on the MACD. The DI plus is starting to head above the DI minus, and the ADX is still above the 25. Turned down a little, but once we get a clearance above that $25 mark per ounce, I think we're off to the races. And I think with that continued support and continued demand with silver, a lot like copper as well, because copper and gold are mined similarly. But we're starting to see a lot of these resources and these commodities in a recovering economy and a changing environment, especially with the energy. We're starting to see a little bit more of I know it's cheap and I know nobody likes it. It looks very unloved, a bit like gold, very unloved. But I think we're starting to see a turnaround. And again, one more chart, seasonality. Oh, monthly chart, sorry. It is looking a little bit choppy. Nothing like the move back there in 2010. Can only go one way there, it's holding it. But this is what the seasonality over 53 years to the year end is looking like. Up. It's just looking like it's up.
Yeah, and hasn't that seasonality been following the pattern for the last few months as well too? Because on that monthly chart of yours, that was like, if I read that rightly, that was 4 or 5 months up. Well, no, the weekly chart was 4 or 5 weeks up, right?
1, 2, yeah, ring low. Hello.
Guys, so when something's 5 weeks up, guys, everybody, what's going on? Major moving averages there. Everything's turning up. Okay.
Everything's starting to turn around. Just keep it, and that's a weekly chart. So coming back down, 4 hourly, I said last week's move was, you look at it again, go, oh, hello. We had some real, double low test bars followed by a really beautiful 3 down, 3. It's so technically pretty. Ring low, bounce up, 3 bars down in an uptrend. Thank you very much. Bit of consolidation. Go retest the area that we've broken on the resistance, and then a push up and just finish the week nicely, hugging a level of resistance.
So Dominic's asked a question. He said, looks like an inverse head and shoulders on the daily and weekly. It does look a little bit like that. I'm not a head and shoulders fan personally, but I understand why you're coming up with that analysis. That's really good analysis to be thinking that through there. And setup, he's saying, so what would you look for before getting into the market? That 4 hourly chart. Right, so what's the trend on that 4 hourly chart that Ainslie had up? Right, just look at it. Okay, so nobody knows what's going to happen next. Nobody knows what's going to happen tomorrow. But this is following the playbook, right? You saw the breakout against the previous high, that high we put in place on the sort of the left-hand side of that chart, right? You saw that breakout. We saw the consolidation, right? Then it put a ring low in place. Then it broke up. Then we came back. We had the classic 2 periods down, right? Then another ring low, and then it moved off again. Guys, how many signals do you want? I can immediately spot 3 different buy signals out of that market, right? How many do you need, right? So, Dominic, short answer to your question. Okay, just need to look at that chart. This is in the world of, oh, that's interesting. There's nothing really negative about that. Okay, who knows what's going to happen next week? For all we know, it may come off next week. That's the whole point about trading. You're looking for the opportunities. If you only trade ring lows in an uptrend, just wait for the next one and see what happens next, right? What's the worst you're going to do? You're going to be buying somewhere near the bottom of a range, right? So if you don't do anything else, right, that's an idea. But there's lots of things going on here, right? Lots of breakouts. And by the way, we're 5 weeks up, right? Yeah. There aren't many markets out there right now in the world that are 5 weeks straight up off an oversold condition.
And I've got to stop clicking. Just bear in mind this really, really strong level of support that it came at resistance that it came and touched on Friday night, and that was the 24.78. So if we get a close next week, obviously the next little bump in the road will be the 200 simple moving average, because you can see here it is well used and tested backwards and forwards anytime it comes anywhere near it. It's a bit like gold in that regard. Anytime gold comes through a 200 simple moving average, it has a little hissy fit, pulls back. We know that's going to happen, so we just prepare for that and risk manage accordingly. But you've got a high test bar there. Do we have a bit more of a pullback down to the trend line? Who knows? But it's trading really technically very, very nicely.
Yeah, look, guys, and here's the thing, right? If the market has been consolidating for a number of months, it's going to take a lot of effort for it to walk its way up through all the resistance levels. Why is that? Because nobody has got it. Literally, nobody has it. All right, come on, let's get real here, right? Of course it's going to trade this way. The fact that it's had 5 weeks off the low, there's I'm really interested moment. Okay, now you just look for those opportunities. Is it going to struggle and fight, and is it going to be a straight up trend in the course of the next, just looking at those charts, there's loads of resistance levels. They got to go, oh, do we get through that? Oh, do we get through that? Oh, do we get through that? You're not going to get a Bitcoin level acceleration, not when it's mucking around here, okay? However, if it continues to trade effectively and well over the course of the next few days, 2 or 3 weeks, right? Keep an eye on these things, right? Look for the opportunities, because if it is, then there's your chance. Because at some point, if it does break, it is going to explode, because you know what? Nobody owns it. People are either short of this or they're flat. And I guarantee you in this market right now, those are the ingredients that you need to create the next bull market. Ainslie, if I could just borrow the chart back for, sorry, are you finished up?
We've got 1 minute.
Great. Okay. If we have 1 minute, I'm just going to grab the chart back for 2 seconds.
Yeah.
If that's okay. Guys, this is what we're going to finish up with here. Perfect. We got 1 minute. Just bear with us. We may need 2. Okay. Here's the thing, guys, right? Remember, whatever you think is going on, right? Are you bullish? Are you bearish? We love our sentiment ideas. We're going to talk about that in a bit in the Trader Talk Radio in a minute. But look, whatever you think is going on, always, always, always go to price. I'm a price action dude. Look at Ainslie. Her analysis was spot on, okay? But she's looking at the price to see what's going on. We know from that fundamental analysis that finding out what the world looks like isn't very hard, unless you can't find any articles on the internet whatsoever about anything at all, right? But equally, knowing what to do is not that hard either. We looked at that supply and demand situation in both gold and silver, and we have come up with a reasonable strategy from a fundamental perspective as to why this market might perform well over the course of the next 18 months to 2 years, right? The difficulty, right, is knowing when. That's why we want to get good at technical analysis to actually make sure that we're going to nail that timing point, right? And that's why, guys, you have solid strategies, right? You have solid risk management so you can do this bit, because this bit is where the money is. Okay, and I can't think of a better place to end. Any more?
All the team, all the crew, thank you very much for listening to us. But if you would like to hear a bit more from Julian and gold and oil, coming up, we've got Trader Talk Radio.
We have, and
I
literally can't wait, because we're going to go through the sentiment cycle, and I love this. I love this. I've got loads of examples of sentiment to show some of you guys, because I want to follow up what we did last time. So look, please tune in, and like I say, as always, guys, thank you very much, and if you have been, thank you for listening. I think we're closing.
Good.
Take care, everybody. See you next time.